Hello everyone, welcome to this video. This is the third video in the series of our training, and this is the Forex Trading Made Easy Academy. And in the previous video, we talked about currency pairs and some other stuff. So we talked about the major currency, minor currency. The first question I have on my screen here and now is, how do you make money trading Forex? Now, people think there are some complicated issues that are related to the whole idea of trading. But the truth is, for you to make money when it comes to trading Forex, you must understand that it simply entails you trading one currency for another with the expectation that price will change. This expectation can be you expect either the price to go up or to come down. I have told you in a previous video that when you're trading Forex, there is a possibility of you making profit or making loss from both ends. Okay, it's a two-edged sword. It goes both ways. Okay. Now, that's the first thing I want to clarify now. So, in case you're wondering, this thing I've been learning now, or these videos that I've been saying, what do they entail? What I'm actually getting from it is because you're going to learn the strategies you would need to decide what the price will be. This is where ideas like fundamental analysis comes into play. This is where ideas like technical analysis comes into play, risk management, and of course, trading psychology. All of these are things that we'll be considering or that we'll be looking at in the course of this training. So if you are new and you've been following, please just continue as we continuously diverge into several items on our plate that would help us get a deep and a clearer picture of everything that we would have to do when it comes to trading Forex. Okay. Now, the first thing I want to tell you is I have in the previous video I talked about base and quote currencies. We talked about pairs, talked about major currencies. Now, in this video, before we proceed, I would love to talk about something that is, how do you read a free quote? How do you read a free quote? Now, currencies are always quoted in pairs. I said it before, such as the Great Britain pound against the US dollars or the US dollars against Japanese yen. Okay, the reason they are quotes in pairs is because in every foreign exchange transaction, you are simultaneously buying one currency and selling another. So when buying, the exchange rate tells you how much you have to pay in units of the quote currency to buy one of the base currency. I have explained this to you before when I talked about quote and base currency. Okay, so in how do you read quotes? How do you read quotes? How do you read quote for free? Now, when you are buying, or when you are trading, or you are doing a foreign exchange transaction, you must understand that the rule is you are buying one and you are selling the other. That is just it. You are doing it simultaneously. So when you are buying in this instance now, the exchange rate is simply going to tell you how much you have to pay in units of the quote currency to buy one of the base currencies. Now, for instance, now if you are going to trade GBP, that is the Great Britain pound against the US dollars, the Great Britain pound you want to buy, which is the base currency, will be measured in units by the US dollar. So I'm going to give you a simple illustration in a couple of slides. So just follow me while I explain this. Okay. So I'm going to give you a diagram or an illustration to give you an exact picture of what it entails. Now, the next thing you talk about here is that let us consider the euro and the USD currency pair. Okay, this is the example I really want to make now. Let's say if the quote is displayed as 1.1200, that is the base currency is 1.1200 and the quote currency is 1.1202. The bid price is 1.1200 and the ask price is 1.1202. So I told you before that we'll be talking about bid and ask price. Now, if all of these things seem a little bit complicated, please don't just follow the video. I'll be explaining everything bit by bit. Okay, so in this case now, we are buying what? The euro And what are we using to buy the euro? We are buying it with what? With the USD. Hope you are following. So we are buying the euro with the USD because the euro is the base currency and the USD is the quote currency. So the unit of the um euro we are going to be getting is going to be determined by the unit of USD we are willing to pay, that has been decided by the market, or you need to pay to get that particular euro. Now this one thing I want you to get now. The spread in this case would be 0.002. Now the ask and the bid price are things I would love to explain somehow later in the video, but the difference between the money or the currency value of the euro and the USD, that difference is the spread. Now in this case it would be what? 0.002 or 2 pips. If you want to sell euros against the USD, you can sell it at the bid price of 1.1200. But if you want to buy, you have to buy it with the ask price of what? Of 1 point. So if you are selling, it is bid. If you are buying, it is ask. The difference between the buying and the selling is what you know as spread. So I will explain all of this in details in subsequent videos, but I just want you to have this basic understanding. So in the next slide, I want to show you something now. Now you can see this is the euro against the USD on my screen, okay? And you can see now the euro is the base currency, the USD is the quote currency, and now the euro is equal to 1.1202. Now if you want to get this euro, this is the unit of USD you are supposed to pay to get the base currency. But if you want to sell, you are going to be selling at a lower rate, which is what? 1.1200. So the difference between the money you will pay to buy and to sell, which is the bid price and the ask price, or the bid and the ask, is what we know as spread. Okay, so I hope this thing is quite understandable. I hope you understand everything I just explained now. So you must know this one is the base, the euro is the base, the USD is the quote. Then the difference between the price, the bid and the ask is what? Is the spread. So if it seems a little bit confusing, just take a deep breath. In the next video, I would explain the bid and the ask price to you. Okay, I hope you're following. Now the next thing we'll talk about here is the explanation of the term pips. I said pips. You can see that when we're talking about the difference between the base and the quote currency not quite long, we saw that there was a difference which was 0.0002. That difference, which is known as spread, is called pips. Okay. Now, in forex trading, a pip is a very small measure of change in a currency pair in the forex market. It is a standardized unit and is the smallest amount by which a currency quote can change. For most currency pairs, a pip is 0.001 or 1/100%. For currency pairs that involve the Japanese yen, a pip is 0.01. The value of a pip varies based on the size of your trade lots and the currency pair you are trading. So I will explain pips in details. I've explained currency pair, okay? But the next thing I want to explain now is you have to understand concepts like I've talked about ask, I've talked about bid, I've talked about spread. Now, another word they're talking about now is pips. I said pips is what the difference between what the base and the quote currencies. And then we said that there's another word or another term being used here now, which is what? The trade lot and the currency pair you are trading. So you already understand currency pair before from the previous video I shared. So if you don't understand what currency pair are, go to the link of this video, the description of this video. You're going to see the link there to the previous video, and then you would watch that particular video, and then you will get a clear understanding of what the term currency pair is. But we still have terms like ask, bid, spread, trade lots, to talk about in the course of this training. So keep your fingers crossed as we will be progressing. Now, the unit of measurement expresses the change in value between two currencies. So if you want to talk about pips now, it's simply what the unit of measurement that expresses the change in value between two currencies. So we talked about the euro and the USD before. So we talked about the ask price and the bid price. The difference between the base price, the difference between the base currency and the quote currency is what we know as what as the pips. Okay, a pip is usually the last decimal place of a price quote. Most pairs go out to 4 decimal places, but there are some exceptions like the Japanese yen pair, they go out to 2 decimal places. Examples of pips for a euro against USD pair: if the exchange rate moves from 1.1200, the bid price, to 1.1201, it has moved by 1 pip. You can multiply the number of pips by the lot size to calculate what your profit or loss. So I told you at the beginning of this video, I said you make money trading forex simply by what? By deciding what to trade based on the expectations that price will change. Now, how do you know that price will change? Via what? Your pips. Okay, we are going to talk about terms like stop loss, take profit, pips, and a whole lot of others. But you can actually get a grasp of all of these as you follow through with the videos. Okay, now you understand what pips are. Pips are simply what? The change, the measurement of change in value between what? Two currencies, or the currency pair, which is the base, and the quote what? Currency. I hope that is quite understandable. And the next thing you must understand is that what? Some brokers use an extra decimal place in their quote. These are known as fractional pips or pipettes. Okay. For instance, if a broker quotes the euros against USD to its 5th decimal place, 1 pipette would be the last digit, representing, that is, 0.0001. There are forex brokers that quote currency pairs beyond the standard 4 and 2 decimal places to 5 and 3 decimal places. They are quoting fractional pips, also called what? Pipettes. So these are more or less, like, I think it's self-explanatory, based on the broker you're trading with. So instead of using the standard 4 and 2 decimal places when they are quoting their pips, they use what? 5 against 3. In terms of, like, so I would explain these details, but let me not just try to pack everything to a single video and then begin to confuse you, but rather I'm trying to simplify this whole issue. That's the whole essence of this training. So I'm trying to simplify this whole strategy to make it easy for you. So I think the concept of fractional pips is simply what? The difference within the numbers after the decimal. Okay, like if you come back here, for instance, let me just take you to this slide. If you come back here, you can see now in this particular case, which is a major currency, the euro against the USD, you can see that after the decimal you have 4 digits. But in some cases, some brokers will be using 5 digits after, when you are trading a major currency, and then they will be using 3 digits when you are trading a minor currency like the Japanese yen, which ought to be what? 2. So instead of using the 4-2 standard, they are using what? The 5-2 standard. So that was what I was trying to make you understand in this slide here. Okay, so that is all for this video for the time being, and I hope you've learned something very worthwhile. Don't forget to actually hit the subscribe button, share this video with your friend, and then I will see you in the next video. My name is Daniel Ibomo.